What's up, guys? Welcome back to DCA. So what we're going to do in this video is take a look at the rally that we've been experiencing the last few weeks. So we're going to look at the rally, we're going to look at where we're at right now, and we're going to look at what the prospects are for this rally continuing. So if you're new to this channel, what we do here is data-driven analysis of the cryptocurrency market. So if you guys like this type of content, hit like and subscribe. You could also head over to the Discord channel to sign up for the DCA Index Risk Model. This is a free machine learning algorithm model that I've created for TradingView. You could sign up for it on the Discord and I'll send it out to you for free. So with that said, guys, let's do it. Okay, so what we have here on the right is something called the volume profile visible range. And this is a metric that we have utilized actually to great success during this bear market. This metric is able to show us, statistically speaking, where there are going to be a large number of holders for an asset. And what do I mean by that? Well, this metric on the horizontal axis that you're seeing here is essentially showing us how much volume has been traded at any particular level. What that means is the more volume that you have, the more likely it is that there are people holding the asset at that level. And that just makes sense. It's intuitive, right? There are going to statistically be more holders. And what you see is that when we come down to these levels where there are a large number of holders, so when we're coming from the upside to the downside and there are a large number of holders, you'll tend to see that that is an area of support. And conversely, when we're coming from a place below a level of a large number of holders, you'll tend to see that that is a level of resistance. And that's simply for the fact that, just think about it logically. If someone is buying into an asset during a bear market at $1,600, $1,700, and we were down at $900. Well, if we get back up to their cost basis, you can just imagine that they're going to be more than happy to get out of the asset at that price because people are ecstatic to get out of a trade that they were down 50% or more on at even, especially when we're in a bear market and people are anticipating continuing downward price action. Okay. And be that justified or not, it's just kind of the way that human psychology works. When we first came down here, when we were down to around $1,800, we made a video talking about this specific metric, and I made a video called The Battle for $1,000 Begins. And that was for the fact that if we looked at this metric, we could see that there was a large amount of volume right at this level. And you can see that there was this gap here. There's not a lot of volume that took place down at this level. And so these are called low volume nodes. And so what happens in these low volume nodes? Well, if you lose your level of support, which we did at the 16 up to around $1,800 level, what we see is that when you get into a low volume node, you're going to tend to see the price rapidly falls through these levels, okay? And we talked about at that time, it was the entire reason for making a video called The Battle for $1,000 Begins when we were sitting at $1,800. We talked about the fact that when you look at this metric, we can see that our next area below a low volume node is right at around $1,200 down to around $1,000. Okay, and sure enough, that's precisely where we ended up stabilizing, at least for that time being. Okay, so that's kind of how you use the metric like this. And, it's never going to be perfect. And we're not trying to pick specific prices. Like when I said $1,000, I talked about in that video, we're not specifically looking for the price to go to $1,000. We're kind of looking in the range around that level because we don't know, this is just giving us an estimate of where the volume is actually at. We don't know specifically where that volume is sitting. So this just gave us a good estimate of where there may be holders sitting at and the fact that we tend to see areas of support at those levels. Okay. So you have to remember that what did we say in these low volume node regions? And that is that the price is going to pretty much rapidly shoot through those zones. And that's exactly what you saw on the way up, just like on the way down, where we shot up rather quickly from this $1,200 level up to this $1,600, $1,700 level. And why did we kind of get stalled out at that level then? And that is for the fact that that is the location of a high volume node. Okay, so lots of volume on the way up. When you encounter that, you're going to encounter an area of resistance. And that's exactly what has happened. And in fact, if you just go back in time, if you go back throughout this bull market, you see that this has been a level of support, this, right at this $1,700 level. This was a major area of support all through the bull market. And now that we're in a bear market, what happens? Areas of support, historic levels of support, become new levels of resistance as you move below them. So we've got below this level, there's a lot of volume in this zone, and now we're encountering it head on, and that's kind of why we're getting rejected. That's kind of where we're at now. So let's quickly talk about, and we're not going to spend too much time on this, but let's quickly talk about what's below us, what's above us, what may happen here based on what we're seeing. So the reason I'm showing Ethereum, normally I would be showing Bitcoin, but the reason I'm showing Ethereum right now is because I think that in addition to the fact that the stock market has it's undergone a rally over these last couple weeks, I think Ethereum is kind of leading the narrative right now with the merge. So, ultimately it's going to come down to two things. And I think one of these things is going to be hands down more important than anything else. And it's going to come down to what the stock market does. So if the stock market is trending sideways to down, I think that you're going to see that this large resistance zone that we're at right here, right from this $1,600 level up to around $1,800, I think it's going to be difficult to get above that. I think the sentiment is so negative right now. I think the number of participants in the market are, so few at the moment that it's simply going to be difficult to get back above this level. Now, with that said, in the prior video that we made, we showed the fact that Ethereum and the number of active addresses has been increasing, and it's continuing to do so actually. So that's at least a positive sign. And if you continue to see that positive trend, then you may be in a place where we could potentially get above this $1,800 level. Although I'm not going to be taking that to the bank. I just think you have to look at the macro picture at the moment and you have to weigh your biases. And at the moment, my bias is the fact that there's so much going on and there's so much uncertainty left in the market that it's going to be difficult to see at least a sustainable move above this $1,800 level. So if we were to get above this $1,800 level, what's above us? And you can kind of see that there's simply a moderate level of volume pretty much all the way up from prices from 2000 all the way up to 4K plus. And that's simply for the fact that, with regards to Ethereum, we spent a long time oscillating between a lot of these different prices throughout different stages of the bull market. And if you recall, what I said in one of my prior videos was the fact that a unique characteristic of this bull market was that we didn't have that true parabolic blow off top that a lot of people expected. And that's simply for the fact that you can't expect that when you have the type of market caps that the market is looking at right now. In addition to that, we sort of have a dilutionary effect from numerous altcoins now that people invest in and believe in. Okay, so, it's going to be more difficult as time goes on, as market caps go up, to sort of get this traditional blow off top, especially for the larger assets. So you'll still continue to see blow off tops occur for smaller assets that people get excited about with smaller market caps. Now you may see multiple X increases, but the, quote unquote blow off top from a 500 billion up to $1 trillion market cap, you're simply not going to see that. So ultimately what we're saying is above us, we have this $1,600 to $1,800 resistance zone. And then, above that, we just kind of have a moderate level of resistance all the way through. So there's no one particular zone that jumps out and says that, there's a huge amount of volume right here. And this is clearly where we're going to either get stuck or move right through. Now you'll note that there are some lower volume areas like here from $2,000 up to around 2150, and then from 2150 up to around 2300. But these are sort of hit or miss. So there's nothing that's sort of jumping out above us. So if we were to get above this $1,800 level, it would just come down to the overall trend of the market. I don't think we're just going to shoot through any particular levels. Now, if we were to go back down, if the stock market were to start to look bearish again, I think you're going to rapidly see us fall back to around 1350, probably first. We may trade there for a short amount of time and then probably back to this $1,200 range, where you'll see that there's quite a bit of volume right in this zone. Okay, and this higher support zone below us, it pretty much extends from around 1350 all the way down to around $1,000. So we do have a fair amount of support kind of in this zone where we traded all through June and then basically through the middle of July. Now, below that, what you'll see is we have another low volume zone. So we're talking right in this area here, and we'll just draw it out. So right in this zone here, we have a low volume zone. And that makes sense, right? We did not spend a lot of time trading in this zone. You'll see that we basically shot right through it right here in January of 2021. We got up to that around $800 level and we shot right through up to around $1,000 and then met resistance at our prior all-time high that we experienced back in the 2018 cycle. Okay. So we have this low volume zone, and this is the area you do not want to go into, because if we start to get below $1,000, you're going to rapidly see the price very likely fall down to around 750 and then probably ultimately settle down here at around $600, where there is again a huge amount of volume. Guys, if people that own Ethereum don't like hearing this kind of stuff, and that's fine. What you have to do here is kind of analyze the data, look at it objectively, and understand what's going on and what your downside risk is, right? Because people have been saying we'll never go to $2,000 again. People definitely were saying we'll never go to $1,000 again. So just don't think that this zone is out of the realm of possibility, because I can almost assure you that it's not. And it all depends on kind of what the market does. If the market from here starts to show strength, which I have a hard time believing that we experience a true sustained rally. Oftentimes during a bear market, you can see, even for multiple months, a rally in the stock market. But ultimately, I think that a lot of things need to sort themselves out first before we can start to see a long-term positive price trend. All right. And it's also to say that we probably need to see a longer consolidation period. Because quite simply, while the Fed is pursuing a quantitative tightening policy, and when you consider the fact that there are very likely going to be additional interest rate hikes, you have to keep these factors in mind, and you have to understand that we are at a major resistance zone right here. Okay. So we're at this major resistance zone. And if you see the stock market start to pull back, I think the crypto market is going to rapidly start to fall. And with respect to Ethereum, I think you're going to quickly see it start to fall down into this zone here, especially as we have this lower volume node below us. So I think there's a lot of things in the general market that need to work themselves out first. And I think when you couple that with the fact that we're sitting at this major resistance zone, I think it's very likely that we're going to see the price pull back from here. So that's going to be it for this one, guys. Until next time, as usual, see you.